next, we have another guest for covering in the fundamental size. A lot needs to be spoken about, especially when it comes to the performance of Midsized Bank. And to take the discussion forward, we have Mayuresh Joshi from William O Research joining us this morning. Good morning there, Mayuresh. I'm going to start off by asking you your assessment overall on the mid-sized banks right now. A couple of updates that have come in. IndusInd Bank seems to be the strongest of the lot for now. RBL Bank, AU Small Finance Bank. Have you had the chance to look at them? And if yes, what are the indicators looking like?
Morning, Nikki. Pleasure to be on your show. No, the updates that have come through have been very, very encouraging. So what we've probably seen as a very positive connotation from Q3 to Q4 continues into Q1 as well. And therefore, the advances growth, the deposit growth for a whole host of these banks that you spoke about gives us the indication that the positive traction for the banking industry as a whole should very well continue. Now, two aspects. One, I think the NIM compression should be there because the deposit growth has happened at a higher rate, and therefore NIMs will remain constrained for the better part of this year unless we see rate cuts. I think that is something that the banking system is probably taking in its stride. And the second element is the new circulars that have come through from RBI related to expected loss provisioning. So there will be some element in terms of accelerated provisioning that will come through on the balance sheet, which means if an immediate comparison is done on a quarter-on-quarter basis, maybe the pre-provisioning operating profit and the post-provisioning operating profit can probably see some amount of difference because of excess provisioning coming through. But the updates have been fabulous in my opinion. The banking system probably looks very, very robust. And banks generally, along with select NBFCs, should continue doing well from an earnings perspective.
I also want to chat with you about HDFC and HDFC Bank. These are the two stocks perhaps which are taking the market a little bit lower after the rally that we've seen, or rather the record highs level that the market has scaled in the last 4 consecutive sessions. With the mega merger of HDFC Limited and Bank that has already took place, it's shaped up from July 1 and the record date is July 13. How are you looking at this? Do you see a further stream to both these, stocks? How would you look at it from a very investor perspective? Sure, the fundamentals remain intact, but how are you viewing these two right now?
So I think once the merger formalities are done and dusted, 3 aspects come through. One, I think the overall size becomes huge. So I think when you're looking at the overall book, it exceeds 22 lakh odd crores, which is far larger than any of its peers. ICICI Bank ranks second, which is almost half at 10 lakh crores. Only SBI probably stands on top at around 31, 32 lakh crores. So I think within the system itself, they're probably going to assume the top 2 positions for the banking system as a whole. The second element is in terms of the entire merger process as well. They'll have a consolidated portfolio, including housing loans, access to housing loans for customers with lower rates as well. And therefore, I think the NIM stability should very well continue. Even for the overall book with the merged entity, both the gross NPAs, net NPAs should be very, very reasonable, as has always been the case. The restructured pie on reasonable terms as well. And therefore, most of the parameters that we probably speak about for the banking industry parlance probably stays put. The third element, valuations have always been expensive for HDFC Bank. And the valuation premium multiple has always been because of the quality of earnings that the bank keeps on posting quarter after quarter. I think most of the issues a few quarters back related to tech, related to few other glitches that we probably faced are way behind them at this juncture. And therefore, it's a portfolio stock, in my opinion, that anybody holding on to this stock should continue holding on. You should be probably bothered with price movements that happen with this stock from a short-term perspective. If you are a genuine long-term investor, this stock should remain on your books.
Okay. HDFC has vaulted into ranks of world's most valuable bank. I'm sure the viewers out there are already aware. But Mayuresh, what I'd want to understand from you is the fact that there is a lot of uncertainty which has taken place in terms of the board consideration when it comes to the higher up appointments coming in for HDFC Bank. That is expected to formalize in the next couple of weeks. Do you think that could be a factor which probably will state some amount of uncertainty on the counter and then thereby give market participants an opportunity to lap up these stocks, if at all?
Absolutely. And in my opinion, I think whatever the processes are in terms of the regulatory and compliance requirements, I think they'll probably fulfill it to the hilt. And therefore, once these elements are taken care of, My personal opinion is that the earnings momentum should very well continue. So yes, I absolutely concur. This is one stock that should probably be there on your radar and in your portfolios as well for a long period of time.
Sure. And also let's talk about Suzlon Energy. I was also talking to Rajesh, our technical guest, just ahead of, just a while back, and he was telling me this. The stock has seen an upfront to an extent of 100% over the last 3 months and probably become the talk of the town. It's going to be considering raising capital after coming up with a right issue that we've seen in 2022. How are you viewing this development? And they also say that, when stocks like Suzlon Energy start doing well, you need to be really cautious of the market trend, especially on the upside. How are you viewing this?
Yeah, that's always been the saying, Nikki. Again, I think this was one of the darlings in the previous bull market, and a lot has gone through for wind companies. Obviously, the tariffs were not in their favor for a better period of 2015 to 20. And therefore, I think a lot of balance sheets got deteriorated. So I think it's a clear case in terms of the directives that the government has probably given. 10 gigawatts expected to get added, interstate transmission charges waived off completely. Tariffs are far better, which means at this juncture, the operating leverage should start paying out meaningfully. A lot of these small companies have actually got weeded out in the entire process over the last 5 to 8 years. And therefore, as bidding starts happening, both from the government entities perspective and private operators as well, these companies will very much remain into focus. The other aspect in terms of Suzlon's balance sheet itself, Nikki, it definitely needs repair. So I think as all these functionalities start playing out from a macro element for the sector as a whole, and individually for companies like Suzlon and Inox Wind, as an example, I think numbers will start getting better. And therefore, the street would ideally like to see what order wins come through, how the numbers are shaping up over the next 2 quarters. A large part of the move in Suzlon has already happened. Further re-rating will happen with numbers coming through. But Inox, in my opinion, compared between Suzlon and Inox, probably look better placed, both in terms of expectations of orders coming their way and from a balance sheet perspective, along with expectations of the capacities that they probably have to deliver and execute any of the orders that probably.
Mayuresh, you think, sure, you would agree with the fact that a little bit of caution is, it's already been sensed in equity markets, given even after the record high levels that we're witnessing, the trading volumes remain thin. But if you talk about something like a primary market, which is seeing a galore of IPOs hitting the market, and something like a PKH Ventures not doing well, the IPO probably getting called off because of lackluster QIB response, HMA has barely managed to scrape through with demand of 1.3 times in the otherwise bull market. Do you think a little bit of cautiousness has already started creeping into the market additionally, incrementally, and this probably suggests a correction coming into the markets in the near term? If in all, I don't know what are you looking at by the end of the year targets, but surely if you were supposed to give a mid-year assessment, what's your view going to be like?
So 2 things. One, I think for the primary market itself, you have to be selective in terms of what companies are probably coming through. The industry positioning and therefore the valuation positioning as well. So I think it's going to be a case-by-case basis as far as the primary markets are concerned. For the markets as a whole, on the O'Neill lens, we're in a confirmed uptrend. I think India is one of the best performing markets so far. Earnings are still expected to hold out. Yes, I think from a Q1 or a first half perspective, IT sector earnings will be closely watched out for. But as banking updates are coming through, they dominate a large part in terms of Nifty earnings. Export companies account for almost 30%, and you slowly and steadily seen resilience in export markets, though there might be chances of a mild recession coming through both for the North American and the European markets, which will have a say. But I think this is a year of consolidation, in my opinion, for the markets after the huge run that we've probably seen. Will profit booking come through? Will there be pullbacks in the market? Absolutely, yes, with the run that we've probably seen. Does that mean valuations are way out of whack at this point of time? I probably don't think so, because if you probably assume Nifty earnings on an FY25 basis around 1,050 odd rupees, you're still talking about an average Nifty price earnings ratio of 18 and a half times, which makes the base case scenario of almost 18,500 for Nifty, as the case may be. So my opinion is that pullbacks, if they come through, will be healthy for the markets. Certain pockets which have run ahead, if they see some certain elements of correction, will be welcomed by the markets. But I think the markets are probably in fine fettle at this juncture. And if anything support, my own sense is that after this first half of consolidation that we might probably see, you might see a roaring comeback on any pullback that markets might witness in the sector.
All right, so that's pretty much optimistic, probably statement coming in from Mayuresh. It's a target that we're looking at, a bit of consolidation, and then again, pull back, and then we scale new highs. But Mayuresh, we're just going to leave the conversation on that. Thank you so much for taking out the time and speaking to us this morning.
Thank you. Pleasure is all mine.